good afternoon, everyone. Welcome to this week's Hydrogen Full Court Press feature interview, where we take a deeper dive into the energy transition that is occurring here throughout the region, as well as globally, trying to get insights and intelligence to help our stakeholders navigate the bumpy road ahead. I'm joined here today by our special guest speaker, Amir Sharifi, Chief Investment Officer of Hy24 and Energy Transition Lead at Ardian. Amir, thank you for joining us today. I just wanted to kick it off with talking about how several months back, there were so many hydrogen deals that have surfaced in the headlines, and in the Middle East, it was very active. Obviously, the Russian war in Ukraine has accelerated in a lot of people's minds that need to shift to green hydrogen. And today, of course, the war is still going on in Europe, which is one of the biggest markets eyed for the green hydrogen sector. So to kick it off, I wanted to ask, what are your thoughts on this? Where are we now in the hydrogen economy amidst all of these challenges that have surfaced in the past year?
Thanks, first of all, for welcoming me today. It's a great pleasure to be back. I think the context is that we are still in an environment where hydrogen investments are massively needed to make the transition happen. It's roughly 700 billion investments that are required to close the gap in big amounts over the decade that is to come. Out of this 700 billion that have been identified as being required, roughly 200 billion today are already at a stage where we are close to final investment decision. So we are seeing that there is a great momentum in terms of industrial projects being announced and being pushed towards creating hydrogen infrastructures and hydrogen projects that will be able to replace fossil fuels and carbon-emitting solutions. And in this context, this is all the more important to catalyze the whole hydrogen sector and bring together three key forces that will make it happen. On the one side, the industrial groups. On the other side, the public authorities, and there have been roughly 120 billion support that have been announced by the main countries in the world for hydrogen investments. And finally, the institutional investors. And on that front, on the last front, I'm very proud that we have closed our last fund, because this will be a catalyst to making it's possible to bridge the gap over the decade. That's at least the goal we have.
Great, yeah, and going off of closing that financing gap that you were talking about in order to further develop the sector, I saw that Hy24 just raised 2 billion euros to invest in green hydrogen projects, which exceeded the 1.5 billion euros that it had targeted in October, so congratulations on that. And obviously this reflects an increasing investor interest in hydrogen. Right. So I wanted to ask as well, how do you see investor interest in hydrogen evolving moving forward? Will it keep increasing? How are investors now viewing the hydrogen space?
We can see basically two types of investors in our fund, and maybe they're representative of the more global market. On one side, you have industrial companies that need to put money at risk in projects and in developments, because this is the way to create an emerging economy. And some of them have actually also agreed to invest in our funds. And we have, for instance, TotalEnergies, Vinci, Air Liquide. We also have Plug Power, Charles Baker Hughes, and also some people from the downstream part, like Airbus, some shipping companies like CMA CGM from France, and also some other players who are representative of the whole value chain, like transmission system operators from Spain, Italy, or France. So we are seeing that there is a momentum and a willingness of many industrial groups to invest into this space. And on the institutional investor side, we also see that there is a big appetite, which is probably driven by two factors. One is that we are seeing that there is a requirement for a lot of that investments to be channeled towards green solutions, or we can also call them impact solutions. And basically, there isn't that much of an offering in that space, in fact, in terms of volume. And generally, if you would be going to an impact fund, in the energy space, you'd be going towards a dedicated renewable energy fund, which will have probably return targets in the single IRR, single-digit IRR field. So if you want to go for a higher risk, higher return type of strategy, hydrogen today is a perfect solution because it is still at its infancy, and even though it's like already a very big investment space, it is still nascent. But at the same time, we can see the path towards it becoming a much de-risked infrastructure solution in the coming years, and a much more attractive risk return, at least a much lower risk return profile in the coming years. And there is probably an advantage to be captured today, a first mover advantage that can be captured today if people from these communities decide to channel their investments towards hydrogen. And this is basically the thesis of our fund. That's the reason why we've been successful in raising that 2 billion in less than 9 months. But I guess it's also a tribute to the whole dynamics around where the impact investment can be channeled in the current environment towards achieving energy transition and net carbon zero by 2050.
Yes, and flipping that question to the other side of that same coin, where before we were talking about investor interest in the sector, and from the other side, the supply or lack thereof on the investment pipeline. Zooming out a little bit at the international level, countries currently that top the list of annual hydrogen production capacity include Australia, the US, Mauritania, Canada, and Egypt, which later this year will be hosting the COP Climate Summit. The UAE itself has targeted to have a 25% of the global low carbon hydrogen market by 2030. So there's a lot of developments happening simultaneously from the supply side of things as well. How do you think the landscape of hydrogen powerhouses around the world will evolve in the next couple of years, in the short term and the medium term?
Well, there is going to be stages. I think we are at a stage where many of the projects which are developed are based towards the low-hanging fruits of this hydrogen economy, being solutions where hydrogen is already used, but produced from a gray source, and simply replacing that natural gas or that coal that is helping to produce that hydrogen, and replacing that with a green source like renewable energy. And that is the case for steel, for cement, for refineries, in their steel manufacture, SMR process, the steam methane reforming approach to it. We have this also for ammonia, which is also produced from natural gas, and it's 180 million tons of ammonia that is being traveling today and being used by fertilizer companies in particular. So we are seeing that there are massive volumes already of hydrogen, either directly or indirectly, that are being used and that can be replaced. So that is probably the low-hanging fruit, and some regulations are coming. But in the meantime, those solutions can be almost competitive without a lot of support, because effectively you can see that the gas prices have been rocketing, which also impacts the cost of that gray hydrogen. And at the same time, we're seeing that renewables are at an ever low cost in terms of production. And so we are seeing that the combination of the two is already kind of helping to bridge the gap in some specific applications.
Right.
Going forward, there will be further solutions, further applications where hydrogen will become extremely attractive. We can see mobility, for instance, but for some specific uses like captive fleets or long-haul traffic, or even for municipalities where they want to decarbonize their usage for garbage trucks or for buses. Those fleets, they can be replaced either, if they're running on diesel, they can be replaced either by electric or by hydrogen. And the arbitrage is usually done by the size. If you're going for a big size of a fleet, you need a lot of big access to power, the grid directly. And also you need to get access to, you probably have a charging time that needs to be well managed. And that charging time can be a problem, and increasing the total cost of ownership for the municipality or for the final owner in those circumstances, where actually hydrogen solves these two problems and can be a better solution when you have a bigger fleet. So we are seeing that there is already those trends coming. And in Germany, one of our first investments was actually in the largest refueling station network that already has 90 refueling stations up and running. And the plan is to triple that amount of reversing stations over the decades to cater for that kind of needs that I'm mentioning. And then maybe the third stage where we're going to see massive transformation of the hydrogen economy in terms of volume is going to be when all the countries you mentioned will become massive producers of and exporters of green hydrogen or green ammonia at a very, very competitive cost, and we'll be able to ship it. And that's the whole, I think, where everything can change in terms of making the energy transition a solution is basically, we can see that today, the places where you can consume energy, where the biggest consumption areas are places where producing renewable energy, as we are doing, we have done historically, is becoming very difficult. The permitting times are long, the land is not so available, etc. And you have the not in my backyard effect that is also making things more difficult. If you are going to places where you have the best resources and the most available land, and also ability to do things at a quicker pace, these are places where actually consumption is not so large, right? Because if you go to the south of Chile, if you go to the Middle East, if you go to Australia, these are some places where there are not that many people living. And if you want to create a grid, then you're going to have a lot of grid losses over between the consumption and the production. So if you can produce, if you can use those locations to produce gigascale renewable power connected with electrolyzer capacity and potentially convert that into a form of hydrogen that is either liquid or ammonia or I mean, we will see which is the best solution over time. But this hydrogen in an exportable form can become a commodity in the future, and we'll be able to channel a green solution for a number of applications, even in places which are not benefiting from the best solar or wind resources. And that will be probably, I think, the moment when we get there, we're going to see massive reduction of the hydrogen cost of production, because we'll be able to produce that at a big scale, considering also that the transport cost will become also a more negligible part of the overall cost.
Right, and as that evolves, as transport costs are projected to become a more negligible part of the overall cost, you know, some of the emerging views state that the ideal route to scale the hydrogen economy is to export green ammonia if it's going to Europe, and if it is exporting hydrogen, then a pipeline would be more suitable. What's your view on this and the feasibility that investors are looking at in terms of the transports itself?
Well, I think the volumes have the potential to be so massive that a number of solutions will be needed. So I don't think they will be really a competing arena. I mean, it will be an arena where different solutions will have to live together and find the best applications for the best cost. There are roughly, to give a figure, there are roughly 1.5 million kilometers of pipelines in the world that can be refurbished and reused for hydrogen in gas form or even in liquid form. In liquid form, probably the solution will rather be in liquid organic hydrogen carriers rather than using cryogenic, because cryogenic creates another its own issues. But considering you're able to choose the right hydrogen pipeline, the right pipelines which have the right coating, the right steel alloys, if you want to select those which are the simplest alloys and the simplest steel, with that criteria in mind, you can make a conversion at a very limited cost, roughly saving 70 to 80% of your capital costs instead of building from new, and that can be a very attractive solution. But again, it will be dependent on this technical aspect that I just mentioned, but also on where that pipeline is located, and probably you also will need to add some more pipelines to cater for the transition, because you will not be switching day one from one to the other. So you might have a moment in time where you have two pipelines running in parallel, or you might have to create extra connections to connect certain places which were not connected in the past. So it is a big equation to be resolved. But I think the simple answer is that we will need ammonia carriers, and shipping will be one solution, but also pipelines will also be a very attractive solution. Just like for oil and gas, we should think that hydrogen economy, green hydrogen will be the new oil of the future, but produced from a green source. And so we can think that for the oil and gas industry, we've been using a number of different carriers, and I think it will be the same for hydrogen.
So multiple transport mechanisms in parallel, and alongside that, you were mentioning earlier that there's increasing, the expectation is for there to be increasing volume over time. There are, in addition to that, there are projected specific areas of applicability in different sectors. And given the current context with gas prices now soaring, like you mentioned, and hydrogen becoming increasingly competitive, what are the chances in the immediate term that you see for fossil fuel-based hydrogen to get more acceptability overall in the coming years, or even in the coming months, given the changes in the past year that we mentioned before?
Well, the fact is that the rising cost of gas and fossils in general is making it more is making the hydrogen from those sources less competitive. And to the contrary, if you are able to produce your hydrogen from a green source that is not reliant on the market price, but rather on the asset that you will be building on purpose, in that scenario, you're seeing that you can already be very competitive. And that is something that many of the users of hydrogen, like the industrial users, are seeing already and are ready to lock offtake contracts on that basis. Probably, and that's the case, is we'll need to get some support to make that even faster and to make that to the right scale. And I think in this context, what has happened in the US recently with the Inflation Reduction Act and the fact that we are seeing this very simple mechanism that's very effective being put in place is going to accelerate things a lot in the US. And I'm hoping to see that this will also push other geographies in the world to also accelerate their own subsidy plans.
And in terms of pushing regions around the world to accelerate their transition plans, obviously we have COP27 just a few weeks away, potentially big commitments coming out of or there were big commitments rather that came out of COP26, and there are expectations for what will be happening after COP27. What about yourself? What are your expectations from COP27, from this particular conference as far as green hydrogen is concerned? And how do you envision the policies and regulations taking shape in the coming months with COP27 as a backdrop?
Well, we can see that there is a momentum from a number of governments in the world that want to support a green hydrogen economy. And the question is how to make it happen in the best and fastest way. And I can see that there are probably two areas where it will be critical. One is to support production. And I just mentioned the example of the US scheme, which is very attractive, and that can be an example for the other schemes that in particular in Europe, we have had long debates around how to put in place kind of contract for a different type of scheme, and having the delegated acts working on it. So now we're looking forward to see that coming into place and to make it, if possible, my wish and if I can, my query would even be that we make it as simple as possible and as easy to understand as possible, so that we can this will help to implement the solution at a faster and bigger scale. And the second is on the mobility side, where this can be a big trigger for demand. Probably we would like to see more regulation that will push the government states to put in place refueling infrastructures in place, because we've been a lot talking about chicken and egg in the hydrogen industry, but in fact it's not that complicated to put some refueling station networks over corridors of where today trucks are going at a long distance, and I mean it's a steady track. So basically, if this is a kind of low-hanging fruit as well, if you can see that the refueling station will be there, the car manufacturers will decide that they will build those fuel cell vehicle trucks, and this will make it much easier and faster to consider than investing into that infrastructure. We have started to do it in Germany, but actually it would be play at a European scale and even in other geographies to do it. And it will, if we do that, if we start to push on that specific trigger, this can generate bigger volumes of demand that today are a bit kind of locked We can see most of the demand is coming from the industrial side, and if we can unlock the demand for mobility at a bigger scale, this will accelerate things at a much faster pace. We can see that on the shipping side and on the aircraft side, there are also some moves that are quite attractive, and we would like to see ground travel as well to be going in that direction.
Understood. So better alignment across multiple moving pieces and keeping it simple. So the KISS principle, if you will, the keep it simple, stupid principle. Great. Well, we'll have to wrap it up there. Thank you very much, Amir Sharifi from High24. For those listening to the podcast, feel free to follow High24 online for updates and for more insights. We'll also be publishing this feature interview on our social media and throughout our networks. Thank you very much, Amir, for joining us today. We appreciate your time and look forward to welcoming you again in the future.
Thank you so much. Speak soon.